Welcome to fxstreet.com. My name is John. I'll be your analyst today. Please make sure that you go to YouTube and subscribe to our channel, and you can follow me at JustAnalysis1 on Twitter. All right, taking a look at Litecoin first here. Really nice sizable bounce from the bottom as it approached that 142 value area. Question always is how long is this move going to take, and will it sustain any higher? The support zone that we'll want to focus mostly on has nothing to do with below the current candlestick, but mostly to do with the lagging span here, this black line on the Ichimoku system. As long as it's above the cloud here, there's some hope that prices will start to climb up a little bit. But if it drops down below the cloud, then that's kind of getting into the danger zone. Oscillator-wise, things are at extremes and they are pointing up. So the optics bands are down in their extreme territory, drifting higher. And the RSI has been oscillating in between the two oversold conditions in a bear market, 40 and 50. And then the composite index is crossing above. So in a nutshell, what you have here are some signs that there is a bottom in. The current resistance that bulls are facing is the Tenkan Sen within the Ichimoku system right at 153.45. Above that, we'll get to Senko Span B, which is up at 164. Areas to look out for ultimately are this is a not an inverse, but a regular head and shoulders pattern with the black line here representing the neckline. The area there is likely to be tested as resistance if we continue to move higher. I want to take a look at the weekly chart though, because that's going to give us kind of a better idea of what to look out for in the short term. So the weekly chart definitely has a kind of an ugly looking setup here. We're inside the cloud, which is a very indecisive zone. Volume point of control is up here at 180. But when you look at the RSI and the composite index, you'll notice a little something. And that is the RSI is really flattened out and is under threat for moving a little bit lower. All right. We're right in between that 40 and 50 zone again. Now, the composite index has dipped down below both of its averages. So that is a warning to me that lower prices are still likely to continue. There is no, bullish divergence present on the weekly chart. In fact, if we go back to the daily chart, you'll notice that if you look at the peak here, let me just clean that up a little bit. If you look at the peak of this candlestick, and then where we're at currently with this candlestick, and then you look at the corresponding peaks on the composite index right here, and again right down here, you'll notice that there's a rise in these highs on these two peaks. Well, from this peak here to the current, but you'll notice that they go down on the price chart. This is called hidden bearish divergence. That is a warning sign to anybody long that the upside momentum may not continue and that it could reverse soon and just continue the movement south. Now, being as there's some pretty strong bottom levels here, the areas that we're likely to see hit for support again will be right where we're actually resistance rather at 153. That's resistance, and then again for resistance at 168.50. If bulls fail to really find any support here, if everything kind of starts to drift even lower, then the next target zone is the 618 fib expansion at 116.68. Thank you for watching, and I look forward to speaking with you in a future video.